Welcome to Accenture's Insurance News Analysis, InsureTech Connect Edition. I'm Abby Compton, Marketing Lead for Insurance at Accenture. Joining me as always is Kenneth Saldana, Accenture's Global Lead for Insurance. Welcome, Kenneth.
Hi, Abby. Good to be here with you.
We're at ITC, and it's so amazing, and even more amazing, Jim Bramlett, Accenture's North America Lead for Insurance, is joining us. Hi, Jim.
Hi, Abby. Thanks for having me. I appreciate the guest appearance.
Well, it's great to be live and in person together.
It is.
It's fun to be here.
So, all right, first story. One of ITC's founders published an article in Best Review talking about the uptick in venture capital toward InsureTechs over the last 5 years. So, how long do you see this trend continuing, and what is the signal for incumbent insurers? Jim, what do you think?
Yeah, I think we've definitely seen massive growth in the last 5 years. As we think about, what are the conditions that fuel that growth? I think there's one set of conditions that are the nature of the industry and another one that are financial. And I think the conditions in the industry are, as long as we continue to see fragmentation or underinvestment in technology, or frankly, consumers or customers with unmet need, we're going to continue to see investment in the sector. And I think the second set of conditions is, last I checked, a lot of InsureTechs find their way to financial success either through IPO or through being acquired by carriers. And as long as there's financial success, I think we'll continue to see investment.
Right. So, Kenneth, one of the things they talked about in the article too is that they say there's kind of two different kinds of InsureTechs. There's those that compete with insurers, and then those that partner with insurers. So, what do you think is the kind of mix that you're seeing?
Yeah, so I think on the mix point, I hope that we'll see more of the partnerships, because I think that extends the reach of what we're seeing in this innovation into a bigger established pool, right? So I personally, I think we'll see more of that partnership and we'll see more of that expansion, right? I certainly think there are some of the offices, some of the InsureTechs that have been more competitive and want to bring new offers to market. I think in those situations, we still see a lot of that being in the area of distribution, in the area of customer service, in the interaction models. I don't think we're seeing the core competition against the capital and underwriting of the risk. So my guess is we're going to continue to see more competition as it relates to how to actually distribute, and then more partnership in terms of how to actually work with the customer experience and the delivery, and that'll probably be the blend that continues.
Okay. So, next story. Cyber insurers are also getting a lot of attention from investors. One such insurer called Coalition focuses on the small and medium-sized business market. Jim, do you see the escalation in cyber threats fueling that continued growth in the small commercial market?
Well, I think we'll continue to see growth in cyber threats. It's just the more complex technical environment that our clients operate in or small businesses operate in. We're going to continue to see that threat grow. I think the focus on the small business sector is interesting. Much like what we see in core P&C, nobody really has a wide share of market share versus others, right? I think the largest carrier has 5 or 6%. So back to the point around investment, it's very fragmented, right? So investment and focus from cyber insurers in that market makes a ton of sense. It's probably just as fragmented for that kind of coverage. And you could argue that small business owners are largely underinsured in this area. So I think it will continue to be an interesting sector. My guess is the exposures are smaller for small businesses versus large corporations. Therefore, the premiums are more affordable for small business owners. I think the question just becomes, like we see in the P&C market, can you really get scale? And will the market support more customizable solutions versus packaged cyber solutions that aren't really specialized, which is what we see in the core P&C market, which is packages kind of run rampant in the small business marketplace. So for me, a bit of a question as to how much can that market grow given what we see in the P&C side.
So a startup called Loop is offering auto insurance to customers using customer behavior data. They say their AI solution will help make things more fair for low-income or less affluent customers. Kenneth, as AI becomes more widely adopted across the industry, do you see it helping to reduce some of those historic biases that have plagued the industry?
I mean, Abby, it's great to see these kinds of companies come into the market because it's actually very consistent with what we've been sort of talking about from watching the trends in the industry, right? And an offer like Loop actually brings together three different things we've talked about. Number one, we've heard customers tell us that while they have some concerns about sharing data, they're happy to share data if they believe they're getting value from it, right? And so you see that this year where customers are quite willing to share their telematics or their driving data if they perceive the value from it. The second thing we're seeing, very consistent with what we would expect in the market, is the high value of personalization, right? So I'm willing to pay for a product, I see value in a product if it reflects my personal behavior and usage. And this is a great example of saying, how do we actually get to that sort of personalized, data-rich offer that feels like something a customer is willing to pay for. So I do think this is going to be a really exciting and continuing trend for the industry. Right? To the point of actually being able to roll back some of the historic biases, I think right now a lot of auto policies still use things like your zip code for where you park your car overnight, and the distance of where you're driving from work to home as some of the more traditional underwriting metrics. Now, I think those are slipping in the prioritization of what factors are used, but they're still out there. Something like Loop actually gets you completely out of those biases, and it really starts to look at where are you driving, how are you driving, and I think it's exciting. I think it actually provides a very good real-life example of how the industry is shifting away from what have been some of the traditional barriers into a much more exciting space.
All right. So it's October, and this is National Disability Employment Awareness Month. U.S. News reported that for many disabled workers, COVID-19 brought about this work from home accommodation that many of them had been advocating for so long. What do you see as the role of insurers in helping people who are struggling with disabilities stay in the workforce? And what can they do to help employers continue those accommodations? Jim, what do you think?
Yeah, Abby, I think it's a great question. I think this expansion of remote work is one of the massive silver linings of what we've been dealing with for the past couple of years, and I think for those with disabilities, it really is kind of a game changer for their ability to participate in the employment marketplace at a much larger scale than they've had to, unfortunately, than they've been able to, unfortunately, in the past. And for me, I think this is less about insurance companies' role in promoting that. I think it is broadly a windfall for employers, period. We've got large untapped talent in the marketplace that can now contribute in a way that we haven't seen before for whatever reasons existed for why they couldn't contribute before. So I think it's a windfall for employers generally, not just insurers.
And I do think, Jim, if the one thing that insurers are doing is, if you look at, we talked about cyber earlier, we talk about the fact that the environment in which people are working has changed. And what insurers have done to actually support and sustain that, I think, is shift how they're talking about work comp policies, how they're talking about cyber policies because of the expansion of threat surfaces with this remote work. So I agree, Jim. It's a broad-based issue for any workforce and a win for employers. I think our insurance industry is doing its part to actually support that with actually flexibility around how those policies are written so that this can become a part of business as usual as opposed to just a very unique period of time.
So last question, a public-private partnership created a new insurance product that protects Mexico's Mesoamerican coral reef. According to the World Economic Forum, insurers play a pivotal role in protecting natural resources, ecosystems, and biodiversity, which fishing communities and tourism depend upon, and for the protection of sensitive coastal areas from storm damage. So do we see this really taking hold, and do we see more natural resources becoming insured assets? Jim, what do you think?
Yeah, I definitely see it expanding, and I think just generally insurance, and people don't talk about it all that much, but I think insurance holds a very important part, plays a very important role in societies in general, which is protecting people and getting people back to work, getting businesses back up and running. It does provide a very large safety net, and to see that transition from lives, health, property to natural resources, I think is a really interesting proposition. I applaud the carrier, the reinsurance company in this story that had the creativity and the product innovation to kind of develop this product. So insurance has always played a big role in driving safety and broader good for the communities they serve. It happened with vehicle safety belts, right, and auto safety belts. So, and I think if you look at climate and you think about what's happening with climate, what we're seeing in North America around natural disasters, if you believe where things are trending, it's only going to get worse, not better. So I do believe that as an industry that takes a proactive role in safety and protecting and restoring communities, it does provide an interesting opportunity for more creativity and more product development, probably in a much more collaborative way than what we've seen before.
And I think carriers are actually very actively looking for ESG opportunities. Right? I think we've talked to a number of our clients who are actively trying to figure out, look, how do I contribute in a meaningful way, both within the workforce and within the organization, but also socially, right? And we've talked about the need of insurers as they kind of redefine their brand purpose and how they activate that brand purpose in market. This is a great place where they can do it. And I think a number of carriers are very actively in this search to say, how do I use some of this creativity? Unfortunately, Jim, as you said, we're only going to see the frequency and severity of these events climbing. And I think there is so along with that unfortunate demand, there's a supply side of insurers who are actively looking to participate and help in these situations, which I think is going to be a very good thing for everyone involved.
So we continue at ITC. Jim, Kenneth, thanks so much for joining us.
Thanks very much, Abby.
Thank you, Abby. Appreciate the invite, gang. Let's do it again.